Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 6th day of April, 2021. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you can't see the screen I have up, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds. That will give you one-click access to the show each and every day. It also gives you access to the chat box so that you can ask questions and participate in the discussion. On the days you're out of the office, away from your desktop, point any internet-connected browser to cfrn.net/live, and there you'll find a live, real-time simulcast of the show as it unfolds. You just won't have access to the chat box. We do stream live during this broadcast on our YouTube channel. Not only do we stream live there, we archive each and every daily show. Currently, there are over 1,600 daily shows archived at youtube.com/CFRN. Let's open with a word of prayer. Heavenly Father, we thank you today for your blessings, for your mercy, for your grace. We place our work and ourselves into your hands. I pray that you would anoint our creativity, our ideas, our energy, so that even the smallest task will bring you honor. When we are challenged, guide us. When we are weary, energize us. May the work that we do and the way that we do it bring hope, life, and courage to everyone with whom we come in contact with. We ask that you would bless the administrators with wisdom and discernment, all of our members with commitment and compassion, and all of our families with courage and strength. Rooted in your love, may your face illuminate everything we do, and we do it all in your name, in Jesus' name. Amen. All right, guys, happy Tuesday. Let me give you the numbers from around the world. These are the cash markets, or the indices, as they're called. Starting here at home in the U.S., the Dow is down 19 points. NASDAQ is up 58. S&P 500 up a little over 6. And the Russell 2000 down 9. In the commodity basket, crude oil up $1.22, trading $59.87 last. It's a gain of a little over 2%. Gold up $17.40, trading $17.4620 last. That's a gain of a little over 1%. Silver up 53 cents, trading $25.31 last. For silver, that's a gain of a little over 2%. And a reminder, when trading silver or the large silver futures contract, a move in the price of silver of just $1, that's worth $5,000. Now, silver's volatile, margins are high, so be careful. In the Asian markets at the close, Nikkei down 392 points, 1.25%. Shanghai down 1.5%, and the Hang Seng gained 560 points, which is a gain of almost 2%. And in the European markets at the close, FTSE up 86, the DAX up 105, CAC up 28, and our mover and shaker there would be the FTSE. That's a gain of a little over 1.25%. So we have a mixed day in Asia. We have a green day in the UK. And it's a mixed Radio Tuesday here in the US of A, with three of the major indices, the NASDAQ, the S&P, and the Russell, in the green. Dow dragging us down just a little bit, negative by only 19 points. So I think there's a possibility that could change even before the show is over today. So with that, we can go to Michael and get a recap of what happened this morning in the live training room. And if you're not ready yet, Michael, we will take a look at the recap that Valerie just sent over. Let me grab it. Format it for the big screen. There we go. Couple more clicks. There we go. All right. We are in week 140 of Logic 247. Logic 247 is our around-the-clock Emini alert service. We open for business Sunday night at 6 p.m. Eastern, and the alert channel stays open around the clock Sunday night at 6 p.m. Eastern until Friday afternoon at 5 p.m. Eastern. Alerts are based on current price action. They're delivered live in real time. It could be 2 a.m., it could be 2 p.m., whenever opportunity presents itself. The purpose of the alerts are so that you can practice what Michael teaches you in the live training room, and hopefully you will learn over time to find these windows of opportunity yourself. You want to get to the point where you don't need anybody to tell you when to get in and when to get out. So you get 2 hours of live instruction every morning, and then you have this afternoon session where you can also ask questions, and the alerts are flowing around the clock. So you've always got something to look at. Look at the alert, look at the chart, look back at the alert. Pretty soon, over time, as you learn the methodology, the strategy, how to read the indicators, you'll start to see these windows of opportunity on your own. So far this week, we've issued a total of 21 alerts. One never triggered. Still waiting on 4. We've had 16 actionable alerts, of which 6% were stopped out based on not risking more than $300 per contract per trade, less when possible, using market structure and a simple 3-step process that we teach all of our traders. Now, we also have a companion alert, the concierge trade alerts. I'll drag those up so you can grab a screenshot. Now, these differ from the logic alerts in a couple of ways. First off, the logic alerts are based on historic price action. The logic alerts are based on current price action. Concierge are based on historic price action. There's 2 numbers for each market. The report is published once per session. The numbers are good for the entire session. So last night, it was about 40 minutes after the Globex Open. What you do is you go to your charts, put 2 lines in the sand. If price starts trending up towards 40.78 in this case. Logic will be looking for opportunities to buy the market up to 40.78 and then only looking for longs above 40.78. If price starts to decline to 40.49, well, that's bearish. So logic will start looking for opportunities to short the market down to 40.49 and then only shorts below 40.49. Same for each one. That should have given you time to grab a screenshot. So Michael, if you're ready, you can take it away.
Sure. I am ready. I am ready. Oops, hang on. Just like that. Over there. I don't know. Everything's giving me trouble opening up right now for some reason.
There you go. I got you.
Close that. Okay.
Locked and loaded. It's all yours.
All right. And I just need to go here. There we go. All right. Ready to roll. Good afternoon, everyone. Today is Tuesday, the 6th day of April, 2021. Let's see. If you've not taken a free trial with us, go to the homepage here at cfrn.net. Scroll down to right here where it says free 5-day trial, no credit card required. Click on that, and it's going to bring you automatically over to this page, eminitrainingschool.com. On this page, all that we ask for is your name, your email, and your phone number. Your name, your email, and your phone number. You can tell it's the biggest trading challenge, so we can tailor 101 training just for you. This is new. So we can tailor 101 training just for you. Hit the send button and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click that link, we don't know that you took the free trial. All right, so today we had a pretty slow morning today compared to how things have been. Again, if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today's the 6th day of April 2021. Today we made 19 ticks in crude, 10 ticks in gold, and 12 ticks on the ES. Put us at plus 440 on the morning session. Today it took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 15 trades this morning. So on the month now, we're at 2,302. That's over 3 trading days, averaging $767 per contract per 2-hour trading day. So far this year, 63 out of 64 days, we've gotten our goal for the day. And on the year now, we're at $55,005. That's over 64 trading days, averaging $859 per contract per 2-hour trading day. Now, we'll get into the trades. Now, we had, out of the 15 trades, probably a third of them were break even, maybe even a little more than a third. But that's because the markets were just choppy. When you see stuff like this, just be glad you didn't get a whole bunch of trade setups that didn't work when you see stuff like that. And, we pretty much saw it coming as it was happening. Now, on the morning session, let's see. Why did I highlight that? That was not an actual trade. Okay, our first trade was right here. On this trade, we picked up 8 ticks. Well, this is our first trade on the ES. We picked up 8 ticks, and this is where we got the goal for the day, was right here. The next trade on the ES was right over here, and we picked up 4 ticks on that to put us at plus 12. And that was all we did. I mean, look at the ES. It's just a mess. And, I mean, you could pretty much see that it was a mess while it was happening. I was giving out areas where I expected it to go, down to and up to and down to and up to and down to, and, well, then we got into the break. But it was just a mess today. And it was, I'm not going to say it was difficult to trade. It was easy to trade. You just had to not trade, is basically what it came down to. That was the ES. Now we'll do crude oil. Crude was a little better today. I mean, yesterday it was awesome, but it was better than the ES today. Anyway, our first trade, this was the first trade. We picked up 1 tick on crude, and I was given my areas as price was going on in crude, and it was doing it pretty well, but it was not doing it as expediently as it was yesterday. No, it was doing it as consistently, just not as fast. So we picked up 1 tick on that first trade, and I was given the areas, but the slingshot either wasn't giving us a trade setup, or we're going into the high of the day, or there was some reason not to take a trade. And then we finally got our second trade over here on crude. Yeah, something's not right about this. We had our first trade, we picked up 1 tick. Okay, our second trade, we picked up another tick. That put us at +2. Then our third trade, we picked up 7 ticks. That put us at +9. Then our fourth trade, we picked up 10 ticks, put us at +19. Then we had a break even, and that was where we stopped trading it for the morning session. There was a short here during the break, and a short here during the break, and a short here during the break. And that was it. You know, it was just that kind of a day today. In all the markets, I mean, look at gold. Look how nasty that was. And the good news is we didn't have a ton of trades that stopped us out. We had a significant number of break-even trades. Here's one right here, break-even trade. Then the next trade, we picked up 4 ticks, break-even trade, 2 ticks to put us at +6, 3 ticks to put us at +9, break-even trade, +1 to get us to +10, and just garbage in here. You know, and I was putting out all the areas that I thought it was going to go to, and it was doing it. You know, going to the areas, doing everything that it pretty much should do. It was just doing it just in a whole bunch of chop. So I did a lot of talking this morning and not a lot of trading because the markets were just dictating that. So back to the spreadsheet. Now, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosure down at the bottom. Today is the 6th day of April, 2021. Today we made 19 ticks in crude, 10 ticks in gold, and 12 ticks on the ES. Put us at +440 on the morning session. Today it took 15 minutes and 2 trades to get to the goal for the day. At that point, we're up $110 a contract, and we took a total of 15 trades this morning. So on the month now, we're at $2,302. That's over 3 trading days, averaging $767 per contract per 2-hour trading day. On the year, we've gone 63 out of 64 days of getting our goal, and we are at $55,005. That's over 64 trading days, averaging $859 per contract per 2-hour trading day. Okay, now if you've not taken the free trial with us and you want to, go to the homepage here at cfrn.net, and I had the same problem when I was loading everything up. Well, go to the homepage at cfrn.net, scroll down to where it says free 5-day trial, no credit card required. Click on that, and you should be brought to this page, eminitrainingschool.com, and it loaded correctly this time. On this page, all we ask for is your name, your email, and your phone number. You can tell us the biggest trading challenge so we can tailor one-on-one training just for you. Hit the send button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? Once you click that link, then we know that you took the free trial. So you got to click that link, all right? Now, Chris, I see you're out in the audience right here. See, this is what's happening. But it's not just our website. There it is. See, it's not just our website. It seems like everything that I've been clicking on. Christopher C., I see you're out there in the audience. If you want to talk to me today, you can send an email to support@cfrn.net. And yeah, I did. I mean, opening everything. I had a browser issue. But yeah, you can send an email to support@cfrn.net and just tell me when you're available, and I'll try to make myself available. Okay? All right. And with that, we can pass it back out to the studio in fabulous Phoenix, Arizona, looking South Mountain, America's largest city park. Okay. Maybe around 1 or 2 Eastern time. I don't know what time zone you're in, Christopher. Okay, so maybe around 1 or 2 this afternoon. If you type in your phone number right here, then I'm the only one who can see it. Well, me, Dwayne, and Valerie, the only ones who can see it. And I'll give you a call or a text or something. And okay, and from me, it'll be coming from a 617 number. Okay. Okay, Dwayne, it's all yours.
All mine? Okay, doke.
Yep.
Take it away. Recap of the recap.
Today, 15 minutes and 2 trades to get to $110 a contract.
Good job.
Thank you.
Okay, guys, we've covered the logic alerts. We've covered concierge alerts, or I gave you a chance to get a screenshot of the concierge alerts. And buyers have not given up. Here's a daily chart of the S&P 500 E-mini futures. Yesterday's new all-time historic intraday high was 40.7375, and the new all-time closing high was 40.70 1/4. We closed just off the high of the session. You can see with that little wick there. Today, we have a new intraday high, 40.76. Yesterday it was 73.75. Today it's 76. And if buyers keep the pedal to the metal, we'll have a new all-time historic closing high again today. Need to adjust this to embrace the new high, like so. And then we need to pull this one up to embrace the new high. Did a very good job of that one. Try to make it look like one line. This is the one I'm not getting right. How's that? That's pretty close. Fibs are an area. So this entire move we've had up from the end of October, beginning of November, from here all the way to the new all-time high put in today, the 24% Fibonacci retracement is down here at 38.74. Now, what makes this number particularly interesting, now if markets continue to climb, then we'll keep adjusting this upwards. But at the moment, at the current all-time high, I'm going to pull these extensions out of here for a moment, clear this field up. There we go. So 24% fib of the entire move up. Right now, it's just dead center, the last bullish cross on the daily chart. And of course, we know when price revisits these areas, it has a tendency to be good support. In fact, we revisited the area here, and it was good support. And it was also good support here. We spiked it a bit, but by the time the session closed, we were back just above that bullish cross. And so, again, if we go a little bit higher, as we move higher, this 24% fib will inch its way up. If we found the top, then that becomes a very important area there. Now, that's the entire move, but just the last leg up, which is from March 25th to today, April 6th, the 24% fib retracement is here, roughly 40.21. Here's the 38. And then the one that really has my eye is the 50% fib retracement of the last leg up. That's where the daily BBC currently is. Let me refresh this chart just to be sure. Yes, the daily BBC bull bear cross. Bullish above it, bearish below it. 50% fib retracement. But it would have to happen pretty quick because we consolidate sideways and or move higher. Of course, this is going to move. If we were to continue higher, then pretty soon the daily BBC would be at the 38. But the 38 will continue to move too as we have to adjust these upper limits. Those of you who are relatively new to trading, you've been trading at new all-time historic highs now for a year or better, and the market just keeps putting in new highs. There will come a day of reckoning. I don't mean to sound like a prophet of doom, but there will come a time when the market will have to take a deeper retracement. Okay? Now, this looks like a pretty deep retracement, but in the grand scheme of things, it's really a pretty shallow retracement. It's a very shallow retracement. I'm talking about a retracement that would take us from, where we are now, up around 40.76. down to perhaps something like 36.50. But for now, the daily candle's green. Buyers have the ball. They're in control. And so the purpose of looking at your daily chart first before anything else, doesn't matter what time of day you sit down to trade, just glance at the daily chart of the market that you're trading so that you can identify major resistance overhead. Obviously, that's today's high, the all-time high, 40.76. Initial support would be today's low, 40.52 1/4. And if price starts to drop and buyers don't support the low of the session, 40.52 1/4, because this was a red candle. Make sure everyone understands that. When this candle opened today, last night, we had a red candle. Then buyers came in at 40.52 1/4 and drove price back up. So initial support, step line, 24% fib, low and climbing, 38% fib, and then this 50, because long before this was the 50% fib, we had 1, 2, 3, 4 days of resistance, 5, 6, 7, 8 days of resistance in this area. Okay, so this area is important, and it just so happens that suddenly this really important area lines up with the 50% Fibonacci price retracement. So you've got the daily BBC, the 50% fib, and as good of resistance as this was for, again, 1, 2, 3, 4, 5, 6, 7, 8 sessions, I would expect it to be at least half as good on the support side coming back. Now, that's how markets work. But we know that 20% of the time the market does something other than the next high probability thing. Once you understand how price flows, what we call logic literally becomes sort of common sense. And price flows on a daily chart the same way it flows on a monthly chart, the same way it flows on a 1-minute chart, and any and every chart in between. From support to resistance, back to support, back to resistance, back to support, over and over, again and again. It's a cycle that never ends. Never will end as long as the markets are in existence. So now we'll go to the 30-minute chart of the S&P. We know overhead, overcoming the high of the day, would put us in uncharted territory. It would put us in a place where the S&P 500 has never traded before. The lowest low of the day. Okay, so 30-minute chart, S&P. Here we are. Now 40, 44, that's a current weekly zone. This is the highest weekly trading zone this week for the S&P. I talked about this last night in the discussion group. Anytime that we hit the highest weekly zone by a Tuesday morning, in most cases, about 80% of the time, that will mark a high for the week, and price will then reverse, and by close of business on Friday, we'll find ourselves at the lowest weekly zone, which is 3914/15. We did not quite make it to the highest weekly zone on Tuesday morning on the S&P. But if I lay my crosshairs on here, we got a pretty good double top going. So this pullback right here, if we get this pullback to the BBC, if it holds, great, maybe we still take a run. But if we pull back and fail, then this double top here, that could potentially be the high for a while. But for now, we just have to trade what's in front of us. So 40.85 overhead, highest weekly zone, Next zone below, 4044/4045. And then got a this week zone at 4025/26. We'll get rid of this old weekly zone down here. That's our picture. Now, last night on the CTAs, long at or above 4078. And as we can see, quiet market. We never got there. Sideways consolidation at the top. Hopefully it will be over soon enough. That retracement that we were talking about can't come soon enough for me, because this type of a market is very difficult to trade. Get a pullback, think you're going to blast off. Look at all the hours we spent consolidating. And then we finally broke loose. This was the opening candle on Wall Street. In the first 30 minutes, we did about 171,000 contracts. Not a bad start, volume-wise. But all it did was push us back up to this area. We got nominally higher. See, the high here was 73.75, 74.5, 75.75, 76. It's an area, okay? So a pull back here to the BBC needs to break this double top. If we fail, pullback fails, I hate to say it, we could be in for some of this kind of stuff for a while, as the bears and the bulls try to determine who's more committed, because it takes financial commitment for prices to rise. All it takes for prices to drop is for buyers to stop buying. If buyers, there's a consensus among buyers, and I'm talking institutional buyers, there's a consensus among them that they're not going to be able to overcome this obstacle, this current high, then they'll back up and wait for a better price to enter. When those buyers stop buying, then the institutions that specialize in shorting the market and that type of thing, they step in. And the market, as you know, hard to find a spot where it dropped because we've done so much climbing of late. But as most of you know, price can drop a lot faster than it climbs. The short side last night for the S&P was 40.49. All right, so that's one down, no trigger. We had triggers on logic. Remember, the CTAs are to serve as your forward guidance for the entire session. And as long as price stays in between these two lines in the sand, that's the market just making up its mind what it's going to do. Right now, it's doing absolutely nothing. It's been sideways now for 1, 2, into our third hour here. This particular candle still has 26 minutes left in its lifespan, but it doesn't seem to be in any hurry to go anywhere quickly. We've had 8,000 contracts traded in the last 4 minutes. Now, buyers will keep buying in an attempt to break these highs. But if, again, the memo goes out, guys, we can't take out this high, then they just stop throwing money at it until it retraces to a point where they feel they can have some effect. So maybe they just let price drop back into this area down here, where obviously we had some support overnight. So they just let it drop back into that area. And then it's sort of like backing up and getting a running start at it. Couldn't make it that time. Back up, make another run. Okay, back up a little bit further, then take a run. Let's see, once, twice, thrice, thwarted. So now do they back up? Maybe back up a little more, take another run. They can't overcome this double top. If they can't overcome the current all-time historic high, they will stop buying. En masse, like a school of fish turning. Okay. Next is the Dow. Welcome to the sideways world of the Dow. This is the most treacherous trading possible. When you've got price above the BBC and below, then above, then below, then above, then below, then above, and you're jammed up here against a weekly trading zone. Prices in between BBC support, weekly trading zones, resistance, support, resistance, back to support, back to resistance, back to support, back to resistance, back to support. We have to break free of that. Okay, so let this thing drop so that we have room to run. Now, the highest weekly zone this week for the Dow is right here. We already overcame the highest weekly zone on the Dow by Tuesday morning. Now, we typically gauge that whole thing by the S&P. The S&P has not quite gotten to the highest weekly zone, but the Dow did it yesterday on a Monday. So, all right, the CTA numbers for the Dow, 33,480. No trigger. Now on the short side, 33, 330. $33, $330. Okay, so from 330 we dropped to 33.08. So it's $100. And then not all triggers are created equal. On a short, you want red and falling at your back. But here, you'd be shorting right into fluid climbing. Like getting in your car in the garage and cranking the engine, and instead of putting it in reverse to back out of the garage, it's like putting it in drive and just slam right into this wall. It spiked it. If you had traded it, you could have taken some profit, but it's not an advisable trade because you don't want to buy, you don't want to sell into support, and you don't want to buy into resistance. And we know right now that support lies right along this line, and resistance is right at this highest weekly zone. Okay. If price takes out this low and this low, and we could drop to this low right here, there's potential support. And then 33, actually we have a zone at 33,185 this week. Now the zones go out to the members Monday morning, 6:15 a.m. Eastern. We've published the zone since December 14th of 2009. If price really does travel from support to resistance and back again, think of your weekly trading zones as fixed support and resistance. From the zone to the zone from last week, back to this zone. It looks like it may want to throw in the towel here. You could draw a little trend line across the bottom. However, I'd still rather not trade this market until we take out these highs. I want to see this low taken out, and then I want to get below these highs. So maybe somewhere down around 33,260. Next is the Russell. This won't take long today. On the Russell, long 22.75. Important prices, important areas, almost always tested. So from 22.75, put in a high. This initial high, 22.75. We made it up to almost 77, almost 2 points. And we made it up to 79. And the swing high here is 22.80. A 5-point move, $50 a point, $250 per contract traded. On the short side, 22.56. The alerts came out the life of this candle last night, during this candle right here, that the alerts came out. So from 22.56, we traded down to 22.45, basically 10 points, $50 a point, $500 per contract traded. Then again, we have an issue. Do we come up and trigger? Yes. But that would mean selling above the BBC, which we don't do. We only buy above the BBC. We only sell below the BBC. Buy above, sell below. And so this would violate one of our core principles right here. So that's all there is. Let's go to the NQ. Okay, NQ ran into a zone from last week, it looks like. 13. Our highest weekly zone this week is 13,675. Let's get rid of this one. Highest weekly zone, 13,670.
Dwayne, I have a quick question. One of our traders posed a question in the discussion group about taking out the highest weekly trading zone, like you've been talking about on Tuesday. Is that trading above it and coming back to test it, or is it just a break? If you could expand on that.
It's kind of just getting there. Anytime we reach the highest weekly trading zone or the lowest weekly trading zone by Tuesday morning. So it's not a matter of breaking it or anything like that. It's just if we get there. And so on the Dow, we got there. On the, let's go back to the S&P. The S&P, we didn't get there. And that's usually the one we measure it by, is the S&P. The S&P failed to get to the highest weekly zone. The Dow, on the other hand, did. What about the Russell? Did I say the Russell? The highest weekly zone for the Russell is 23.21. So no, we still got plenty of room to go on the Russell. So the idea behind it is if the S&P, and we've always talked about it in S&P terms, if the S&P gets to the highest or lowest weekly trading zone by Tuesday morning, 8 times out of 10, we'll see the market turn, and by the end of the week, we'll be at the opposite zone, be it the lowest or the highest. And sometimes price has traded above the highest zone, bounced around for a day or two, and then dropped. But 8 times out of 10, if we touch the highest or lowest weekly zone by Tuesday morning, we will be at the opposite extreme zone by the end of the week. So this week, while the Dow qualified, we've always measured it in S&P terms. So yeah, we'll see how this one works out. And so I hope that answer suffices. If whoever that was, if you have any more questions, just put them in the chat box if they're here. Now, were they looking for some specific trade setup, or were they looking for like, oh, okay, so I get in here and short the market or something? Or is that the kind of thing?
No, it was more in conjunction with the logic alert that was already out in the channel. How to try, how to use those in combination for decision making.
If I feel like we've qualified, I'll be sure and let everybody know, both here and in the discussion group.
Okay, excellent. Okay. Thank you.
You bet. Okay, so we covered the Russell. Let's do the NQ. All right, so 13,675. And then we got a zone at 13,475. And then below that, 13,390. Okay, so the CTA last night for the NQ, let's see, we came out right here on this candle. And on the long side, the number was 636. And we failed to get to the zone so far. From 36, the swing high was 55. So that's almost 20 points. It's almost 400 bucks. From 13,636, 46 to 56. We're 1 point shy of it, so it's 19 points at $20 a point. Now we may come back to the BBC, then if it holds, maybe we'll make another run. This is the highest weekly zone for this week. Oh, I think everybody believes that we're due for a pullback. I wrote last night in the discussion group, we don't use terms like overbought, oversold, but if I was ever going to use such a term, and the reason we don't use it is because it's sort of a nebulous term. A market can stay overbought for weeks, months, years, depending upon your perception. Like the current price right now in this market might seem very high to many traders, but to the trader who bought 13,655, it seems like a very low price. The guy that bought up here wishes he had bought here. So a lot of it's relative, and it's when the consensus amongst the larger institutional type traders coincide that we can get these dramatic moves, or everybody gets the memo. You just got to be on the memo list. Okay, the short side for the NQ was 13,450, way down here, never touched. Yeah, I just, we're at an all-time high. We can't seem to get a move on. We've got this double top looking kind of a thing here in the NQ. Russell, you could draw this out a couple different ways. No, that'd be too dramatic. So for now, we would just have to look at it. So top, to the bottom, to the top, comes back to the bottom. That is a current weekly zone, 2240 down here. These are all current, I believe. 2264, 2287, yes. Okay. We got basically a double top going on here in the NQ between yesterday's close and we had a slightly higher high. And that's that slightly higher high that I'm always suspicious of. Next is the Dow wasn't able to give us a double top, but it has spent most of the session, well, since shortly after the London Open, we've just been congested right here at this highest weekly zone. Okay, so now crude oil. $59.80 was the CTA on the long side. $59.80, and so swing high was 60.34. So from 59.80. That's about a $500 per contract move. Now the zone itself is at 60. That's an old weekly zone there. We don't have a this week zone there. In fact, I'm going to leave that zone because it's still holding sway over the market, as is this one, as is that one. So let's see, where are we right now? At 60. The next this week zone. Even this is a last week zone. We do have a this week zone. Way up at 62.25. And below that, 60.60. Let's get rid of this one. 60.60, current weekly zone. Okay. All right, so the CTA, again, was a 59.80. So about $540 per contract traded. Then we got back below the trigger. But another one of those situations. On a long, we want blue and climbing. Unfortunately, on this trigger here, doesn't mean you couldn't have still traded it. You can, okay? You could, but you don't want to, again, drive into that brick wall. So this green candle comes up. It hits red and falling, the brick wall, knocks us down. But then we take another run at it. Buyers take another run at it. And once they clear that swing high, then just based on market structure, you could enter in this area around $60 and be careful as we approach this high. So that's would be a nice, $300 window of opportunity in there. But it did keep going up to the zone. Now it's come back to the zone, and the BBC is like it's come back to the trigger, and now price is sitting right at the trigger, right at the BBC. So trading this trigger, you've got blue and climbing, but I'd rather have blue and climbing like this, because when it's overhead like that, that can become resistance. So trading this means you have potential resistance at the high of this candle, at the step line, at blue and sideways. Not something I would put out as an alert in logic. So this met the requirements. This failed. You would have to be patient and wait and use your own knowledge of the methodology and strategy to take advantage of that. And then over here, I would probably wait for price to get up here, like 60.35 up to 60.55, something along maybe 60.40 to 60.60, right there. Okay, and then the short side on crude was 57.95, which we obviously never got that, because the alerts came out on this candle right here. Okay, next is gold. And the CTA last night for gold was to be long 17.31. Right here. The alert came out on this candle right here to be long 17.31. And blue and climbing, that's what we're looking for. We want to be out riding the back of blue and climbing on a long until 17.31. Now the next zone overhead is actually 36.37 for this week. And then above that is 17.46. Okay. And then we'll take this out. And we'll take this out. And this is 17.22/23. So those are all current weekly zones now. So from 17.31 to the zone overhead, 5-point move, $500 per contract traded. Important prices, important areas are almost always tested. Price gets back below the trigger, but not all triggers are created equal. On a long, we want blue and climbing, not red and falling. That represents resistance. As you can see, price tries to move up and it gets slapped down. It tries to move up and it gets slapped down. Finally, right here, price manages to close. This is the first candle right here. Closes back above the BBC. So I would not enter here at 17.31. Gotta wait for price. Overcome. And even then, as you look left, you're going to see a potential obstacle. You're going to see a potential obstacle. And you got a zone. And you've got right here potential resistance. Tried once, tried twice, tried 3 times, finally got through it and made it up to the next zone. So good trigger here. Very challenging to be here. Now, once price took out this high, with just your knowledge of the methodology and the strategy, you could have been long up in this area here, 17.40, the 6-point run up to the zone. And the 17.25 was the CTA on the short side, and that never triggered. Okay, we only got one market left. I'll tell you, this wouldn't take long. Not a lot happened. Silver CTA, long 25.19. 25.19 to 25.35. 16 points. 2 pennies is $100, so that's like an $800 per contract move. That covers it. And again, on logic 247, the recap I gave you. Total of 21 alerts so far this week. 1 never triggered, waiting on 4, 16 actionable, 6% stopped out based on not risking more than $300 per contract per trade, less when possible. In the live training room, Michael is teaching you every day to use a hard stop on every trade. That has to become ingrained in your thinking. Very important. Got to have a hard stop. For simplicity's sake, as he's teaching you the strategy, we use a simple 8-tick hard stop on every market, every trade in the training room. It's when you start to trade the alerts, trade in the larger time frames. That's when you want to learn to embrace market structure so that the market can literally tell you where you should put your stop loss if you're going to enter at any particular price. Okay. Good word for the day. Doubts. We all have them. Question is, how do we deal with them? John 20:25. Unless I see the nail marks in his hands, put my finger into them, and put my hand into his side, I'll never believe. We all know those were the words of doubting Thomas. Thomas wasn't there when Jesus first appeared to his disciples after the resurrection. And like many of us, other people's experiences weren't good enough for Thomas. He had to have his own. And Jesus made sure he got them. Note, he didn't put Thomas down for having doubts. He understood that any question arising from an honest heart isn't a skeptical question. It's a search for truth. The Bible tells us in John 20:26, after 8 days, his disciples were again inside, and Thomas with them. Jesus came and stood in the midst and said, "Peace to you." Then he said to Thomas, "Reach your finger here and look at my hands. And reach your hand here and put it into my side. Do not be unbelieving, but believing." And Thomas answered and said to him, "My Lord, my God." Now we can glean 2 very important lessons from this story. Number 1, your doubts can actually lead you to a new level of faith. When the bottom drops out of your world, when the pain of your circumstances seems unbearable, when some shattering event occurs and doubt marches in unannounced, don't deny it, acknowledge it. Times of doubt become classrooms of learning when they drive you to God for the answers. As you work your way through them, you reach a new level of faith. Number 2, your doubts can lead you to a deeper relationship with Jesus. The testimony of others will only carry you so far. Ultimately, you need your own personal experience with the Lord. The good news is you can have it. Thomas started out doubting Jesus and yet ended up dying as a martyr for his cause. Think about it. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, May God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.